Hello, my name is Troy Adkins, and I am the founder and owner of Adkins Capital Management. Adkins Capital Management is a housing advisory services company. I want to talk to you today about the key events that have transpired in the U.S. residential housing market during the first quarter of 2023. During the first quarter of this year, a research report by the Terner Center for Housing Innovation of UC Berkeley titled Incentivizing Housing Production, State Laws from Across the Country to Encourage or Require Municipal Action, and Supplemental Housing Production Policy Recommendations made by the American Enterprise Institute in its 2021 review, and Supplemental Housing Production Policy Recommendations made by Adkins Capital Management, and a review of the monetary policy actions of the Federal Reserve to help curtail the impact of inflation on the U.S. economy were the primary topics of conversation. This movie presentation also provides an overview of the home price level for a select group of cities that make up the Adkins 60 City Home Price Index, and it provides a wealth of information for prospective homebuyers to use in order to make a prudent home purchase decision. This presentation was written, narrated, edited, produced, and published by Troy Adkins. I am the founder and owner of Adkins Capital Management. Adkins Capital Management is a privately owned and independently operated company. Our exclusive focus is on residential real estate. ACM is not affiliated with any parties associated with the residential housing industry. Our mission is to bridge the gap in the residential housing market, where deficiencies in education, public policy, regulation, product structure, and personnel have created an environment where prospective homebuyers need objective information and useful analytical tools in order to help them make a prudent home purchase decision. As an investment professional, I have more than 15 years of real estate analysis experience, more than 10 years of institutional investment consulting experience, and more than 8 years of freelance financial writing experience. I am also the author of more than 25 published articles. For more information about my background, skills, and experience, please visit the Adkins Capital Management website. With this overview of Adkins Capital Management in mind, let me now turn your attention to our analysis of the Terner study that pertains to incentivizing housing production across the U.S. The premise of this study is based on the fact that, for more than 10 years, the U.S. has produced housing at a rate that is inadequate to account for the growth in population and the nation's wealth. For the first quarter of 2023, a research report by the Terner Center for Housing Innovation of UC Berkeley, titled Incentivizing Housing Production, State Laws from Across the Country to Encourage or Require Municipal Action, was the primary topic of conversation. The Terner study presents insights from the first nationwide database of 144 state pro-housing laws in 20 states and sets forth a typology illustrating how states around the country are attempting to influence local government action on housing production and access. The Terner study seeks to understand how state rules influence housing supply and provides a roadmap to understanding the potential for state intervention and local land use laws to expand the supply of and improve access to housing. The premise for the Terner study is based on the fact that for decades, the United States has produced housing at a rate that is inadequate to account for the growth in population and the nation's wealth. According to the Terner study, numerous factors contribute to the shortfall in housing production, including high construction costs, limited availability of construction materials, local land use regulations such as zoning policy, and household income inequality. The following points were the key takeaways from the Terner report. Roughly half of the 144 laws that were found in 20 states had a component that required municipalities to plan for the housing needs of their respective regions in some way, or expanded existing requirements to plan for housing locally. A focus of pro-housing laws in the states pertain to increased production of affordable housing. At the state and local levels, a renewed interest in local land use regulations needs to be an ongoing focus. State legislatures need to pass legislation specifically designed to spur affordable housing production, to encourage sustainable developments to control sprawls, and to help mitigate climate change. The Terner study also made the following state and local recommendations. Policies that increase production of market-rate housing should be promoted by encouraging the development or preservation of affordable housing, furthering fair housing by reducing discrimination and exclusion in housing markets, and promoting sustainability. Housing production should be boosted by allowing modest increases in density across the states in neighborhoods previously zoned only for single-family homes. For example, allowing duplexes to be developed in areas previously zoned only for single-family homes. Encourage lot splits and housing developments with up to 2 units on parcels zoned for single-family. And build housing near transit facilities in order to reduce the need for car travel. The Terner study concluded by stating that further research needs to be conducted and that a nationwide housing database needs to be developed in order to be able to assess all state and local housing policies. The lack of necessary housing production in the U.S. has been an ongoing problem for many years. Accordingly, the following recommendations were made by the American Enterprise Institute in their March 2021 review titled The Paradox of Accessible Lending, as presented to the U.S. Senate Committee for Banking, Housing, and Urban Affairs. Here are AEI's recommendations for addressing the housing supply shortage in the U.S. Increase supply and reduce income stratification through the legalization of light touch density housing, meaning make 2, 3, and 4 unit and single-family attached housing legal in 1 unit single-family detached neighborhoods. Increase the density allowed for single-family and multifamily zoning, including expanding multifamily zoned areas. Allow multifamily development in retail, office, and light manufacturing zones. Increase the allowable floor area ratio in multifamily housing areas. Promote walkable neighborhoods with a mix of residential and quiet commercial properties to bolster housing stock and to foster a clean and harmonious housing environment. Reduce minimum lot size. Streamline or shorten the permitting process and timelines, including one-stop and parallel process permitting. Reduce impact and utility investment fees. Allow prefabricated construction. Allow the conversion of office units to apartments. And legalize home-based businesses. For more information about the AEI study, watch the following video presentation that was created by Adkins Capital Management for the 2021 Q1 period. The founder of Adkins Capital Management has been reviewing the housing production policy recommendations that have been made by many think tanks, governmental housing agencies, and public interest groups for numerous years. ACM believes that local land use planning and regulations need to be expanded far beyond what is being proposed by the Terner Center, the American Enterprise Institute, and other housing constituencies across the U.S. Here are the housing policy recommendations that ACM believes needs to be implemented in order to bolster the U.S. housing stock to the necessary levels across the U.S. First, stormwater drainage needs to be the primary concern for existing housing stock and new housing developments. Whether the flooding problems that are prevalent in many neighborhoods throughout the U.S. are a result of climate change, urban sprawl, the lack of stormwater drainage maintenance, or poor planning, ACM recommends that all housing developments have comprehensive, heavy stormwater drainage systems. Local planning commissions must have the legal authority to enter private property, regardless of easement provisions, in order to fix stormwater drainage problems. Such authority may have to be established via special election voted upon by the people in the community. Second, ACM recommends the construction of efficiently designed, high-rise buildings in residential neighborhoods across the U.S. in order to produce housing at the needed scale in an economical, efficient, and effective manner. Manhattan has numerous high-rise buildings that can be used as model housing developments across the U.S. Third, ACM recommends high-rise building developments that are made of steel, concrete, and glass, with many units sitting on one solid foundation under one roof, with all of the plumbing, electrical, and HVAC designs constructed in a cost-efficient manner. Such housing developments will improve the quality of life for all people. Fourth, ACM believes that blocks of land for housing development can be acquired throughout the U.S. by giving current neighborhood landowners a unit of their choice in the newly built high-rise buildings. Such a proposal will require temporary housing for the displaced property owners until the newly developed housing is constructed. Fifth, ACM believes that high-rise residential building developments should be zoned according to lifestyle in order to maintain a harmonious environment. Such zoning will allow for the development of needed ancillary facilities in close proximity to the housing development to meet the unique daily living needs of the tenants. With this overview of the pertinent recommendations incentivizing housing production in mind, let me now turn your attention to our analysis of the Federal Reserve's monetary policy. The general theme of this section is that the Fed has set forth hawkish monetary policy via higher interest rates to curb inflation. The outstanding questions raised by Adkins Capital Management are: why did the Federal Reserve cut the reserve requirement to 0% in 2020, and when will it be raised? Currently, the Federal Reserve is primarily concerned about reducing rampant inflation in the U.S., and their tact is expected to continue throughout 2023. As a result, the Fed has taken a very hawkish monetary policy stance to lower the rate of inflation to a level that will foster an affordable cost of living. Accordingly, the Federal Reserve raised the target range for the federal funds rate from 4.25% and 4.5% in December to a range of 4.5% and 4.75% in February, and again in March to a range of 4.75% and 5%. To follow suit, the national average mortgage loan interest rate for a 30-year fully amortized fixed-rate loan began the quarter at 6.73% and ended the quarter at 6.93%. The national average mortgage loan interest rate for a 30-year fully amortized fixed-rate loan reached an all-time low of 2.67% on December 17, 2020, and the all-time high of 18.63% in October of 1981. In light of the Fed's policy position, it is perplexing to understand why a major monetary policy feature that is at the discretion of the Federal Reserve is not being utilized or even discussed in order to combat inflation in the U.S. For more than a decade prior to March 26, 2020, the reserve requirement was fixed at 10%. At that level, the amount of money in circulation would have been curtailed to a level that would have helped mitigate inflation. Moreover, such policy strengthened the financial solvency of the U.S. banking system. However, on March 26, 2020, the Federal Reserve lowered the reserve requirement from 10% to 0% for all depository institutions. This policy provision dramatically raised the amount of money available to be in circulation, which in turn helped exacerbate inflation. To make matters worse, Such policy weakened the solvency of the U.S. banking system. With that in mind, it would be prudent monetary policy to raise the reserve requirement back to 10% in order to help curtail inflation, examine its impact on the inflation level, and if still necessary, continue raising the reserve requirement until inflation is brought down to an acceptable level. Such a position would also allow the Fed to implement a more dovish monetary policy in terms of interest rates, which in turn would help bolster the U.S. housing market, help the GSEs exit conservatorship, and strengthen the financial integrity of the banking system. Finally, it's important to note that it is prudent policy to have a reserve requirement of at least 10%, because it will mitigate the need for the Federal Reserve stress test, which is inadequate for measuring the stability of the U.S. banking system in an environment of rising inflation, rising interest rates, and recession. Simply explained, without a material reserve requirement level, the impact of a prolonged inverted yield curve could wreak havoc on the U.S. banking system, because the banking system's business model does not work in an environment where it has to borrow money on a short-term basis at high interest rates and lend money on a longer-term basis at lower interest rates. Now that I have provided an overview of the events and trends that have taken place in the residential housing environment for the quarter, let me turn your attention to the proprietary finance-based analytical methodology and cloud-based residential real estate analysis software application that you can use in order to provide an assessment of the price level of homes in your community, as well as for specific home purchase opportunities. The Adkins Residential Home Valuation Analyzer is an internet-based software application that analyzes the relationship between the median home price level for a city and the median household income level for the city. With this information, the software application takes into account the most recent month-ending national average mortgage loan interest rate for a 30-year fully amortized fixed-rate mortgage loan, and the assumption that no more than 28% of pre-tax household income should be spent by homeowners in order to repay the principal and interest costs for their mortgage loan. By utilizing this information, the Adkins Residential Home Valuation Analyzer can accurately assess the price level of homes in your city. From the first analytical perspective, the Adkins Residential Home Valuation Analyzer determines the level of underpricing or overpricing of homes in your city by calculating the mortgage loan interest rate that justifies the price level of homes in your city. With this information, the justified mortgage loan interest rate is compared against the national average mortgage loan interest rate in order to accurately quantify and assess the level of underpricing or overpricing of homes in your city. From the second analytical perspective, the Adkins Residential Home Valuation Analyzer calculates the percentage of household income that would have to be spent by the people that live in your city in order to justify the price level of homes in your city. With this information, the justified percentage of household income amount is compared against the traditionally accepted household income amount of 28% in order to accurately quantify and assess the level of underpricing or overpricing of homes in your city. By utilizing the Adkins Residential Home Valuation Analyzer, you can determine the level of underpricing or overpricing of homes in your community, as well as the magnitude of underpricing or overpricing of a specific home that you are considering to purchase. This, in turn, will help you make a prudent home purchase decision. For more information about our finance-based analytical methodology and the use of the Adkins Residential Home Valuation Analyzer, please review our finance-based analytical methodology report on the Adkins Capital Management website and watch the wealth of movie presentations that provide an overview of how the Adkins Residential Home Valuation Analyzer is utilized. Based on Adkins Capital Management's home price level analytical methodology, This section of our analysis pertains to ACM's housing analysis. The general theme of this section is that home price levels are overpriced in 54 cities among the Adkins 60 City Home Price Index. With this overview in mind, let us now focus on the assessment of the price level of homes across the country. Based upon the justified percentage of household income amount, 54 cities that make up the Adkins 60 City Home Price Index were classified as overpriced for the quarter. Honolulu, Los Angeles, San Diego, San Francisco, and Portland, Maine were identified as the 5 most overpriced cities in the index. It is important to note that San Diego and San Francisco had the same justified percentage of household income amount. In terms of a relative price level analysis, it is not possible to justify the home price level for the top 5 overpriced cities by reducing the 30-year fixed-rate mortgage loan interest rate from 6.93% to 0%. Therefore, in order to classify the homes in the top 5 overpriced cities as underpriced, it would need to be deemed prudent by prospective homebuyers to spend more than the respective justified percentage of household income amounts. In order to justify the median home price level for each city, the median required household income level would need to increase to a level within the respective range of $200,003 and $397,169. Based on the median household income level, the quarter-ending national average mortgage loan interest rate, and the assumption that no more than 28% of pre-tax household income should be spent in order to repay the principal and interest costs of a mortgage loan, the justified home price level for the top 5 overpriced cities fell within the respective range of $233,031 and $444,803. Prospective homebuyers should use the Adkins Residential Home Valuation Analyzer in order to assess the level of overpricing of homes in their community. Based upon the justified percentage of household income amount, 6 cities that make up the Adkins 60 City Home Price Index were classified as underpriced for the first quarter of 2023. Detroit, Cleveland, Jackson, Des Moines, and Huntington were identified as the top 5 most underpriced cities in the index. Birmingham, Alabama was identified as the 6th most underpriced city in the index, as its justified percentage of household income amount matched Des Moines at 28%, but its justified mortgage loan interest rate was lower at 6.95%. In order to classify homes in the top 5 underpriced cities as overpriced, the national average mortgage loan interest rate would have to increase from 6.73% to more than the respective justified mortgage loan interest rate amount for each city, which fell within a range of 7.2% and 19.7%. Or it would have to be deemed imprudent by prospective homebuyers to spend as much as the respective justified percentage of household income amount for each city in order to repay the cost of a mortgage loan. Given the recent events that have transpired in the residential housing market, and taking into account the fact that buying a home will likely be the largest single financial transaction that prospective homebuyers will ever make, and the bulk of their net worth will likely be tied up in their home, prospective homebuyers should use the Adkins Residential Home Valuation Analyzer in order to analyze residential real estate from 5 financial perspectives. First, prospective homebuyers should use the Adkins Residential Home Valuation Analyzer in order to assess the level of underpricing or overpricing of homes in their community. Second, prospective homebuyers should use the Adkins Residential Home Valuation Analyzer in order to assess the largest amount of money they should spend in order to purchase a home. Third, prospective homebuyers should use the Adkins Residential Home Valuation Analyzer in order to assess the amount of money they would need to earn on an annual basis in order to be able to afford to purchase a specific home. Fourth, Prospective homebuyers should use the Adkins Residential Home Valuation Analyzer in order to assess total home ownership costs expressed as a percentage of household income. And fifth, prospective homebuyers should use the Adkins Residential Home Valuation Analyzer in order to assess how much a home would need to appreciate in value each year in order to offset the costs associated with owning the home. By assessing residential real estate in this manner, prospective homebuyers will be able to make a prudent home purchase decision. For more information about the Adkins 60 City Home Price Index, to watch our catalog of residential housing movie presentations, or to subscribe to use the Adkins Residential Home Valuation Analyzer, please visit the Adkins Capital Management website at residentialrealestateanalysis.com. This is Troy Adkins, saying thank you for taking the time to listen to this presentation.